evening, everyone. So let's begin. So I have taken one of the specimen paper for AS accounting level. So let's solve one of the specimen paper, paper one multiple choice for examination from 2023, as you can see on the screen. So here is the first question. In financial statement, inventories are valued at the lower of cost and net realizable value in the statement of financial position. Which accounting concept is being applied? All right. So in this case, they are asking you about which accounting concept is being applied. So simple question over here. So in this case, it is not duality, it's not historic cost, it's not matching. It is nothing but the right answer is D. So what is the concept of prudence? Prudence says that you should never overvalue your asset, not nor undervalue your liability. So in this case, whenever I'm taking into consideration the valuation of closing inventory. Normally, we take into consideration NRV or the cost, whichever is lower. So we value it at a lower price in order to make sure that the closing inventory is not overvalued. So if it's overvalued, your current assets would be overvalued. So that's why D is the right answer. I hope you all know what is NRV. NRV is nothing but suppose I can sell a product at $100. Okay, so the sale price of the product is $100. Suppose the product is a bag. But in order to sell the bag at 100, there is some repairing work which has to be done, which will cost me suppose $20. So technically I'm getting 100 in my hand. But in order to get 100, in order to sell that product for 100, my $20 is being spent. So the actual net realizable value for that product is 80. Okay, so that is the meaning of NRV, net realizable value. And suppose the cost of that product is 50. So you have to measure the or value the closing inventory at $50. Why? Because 50 is lesser than 80. Hence, we do this because of the concept called prudence. So that is the reason prudence is the right answer. Moving ahead with the second question, which statement describes the advantages of computerized accounting system? Very easy question. It allows for large amount of data to be stored. Yes, this is one of the advantages. Mistakes in entering data are never made. No, you cannot assure or take guarantee. The system can be installed with minimum cost. No, again, this is not true. The trial balance always balances. Yes, because it's if you are doing through computerized accounting system, there are less chances that the trial balance will not balance. So again, the right answer would be 1 and 4. So B is the correct option. Now, moving ahead with the next one, what would be treated as a part of the capital expenditure for the purchase of building? Okay, so first is cost of purchase, installation of air conditioning needed for the machinery in the building. Third one is insurance. So very simple question. Yes, we will take cost of purchase. Obviously, that is the capital expenditure. Plus, you will have to add the installation of the air conditioning, whatever charges. That also you have to add it and calculate or and capitalize it. So one and two would be the capital expenditure. Insurance won't be a capital expenditure because it's a revenue expenditure. Every year you might have to take the insurance or for that building. So the third one would not be a capital expenditure. So the right option would be 1 and 2. That is option number B. All right. Moving ahead with the fourth question. The table shows part of statements of financial position of a business. Okay. So these are the information given: cost value, accumulated depreciation, net book value, so and so. So let's understand the question. What have they said? Which amount was received from the sale of non-current asset? So basically, they want you to calculate the sale price for the non-current asset which you have sold. So very interesting question. Let's go ahead. Okay, so let's try doing this question. So over here, we have to start with the non-current asset. What was the cost of that non-current asset in 2019? So in 19 it was 1,90,000 plus during the year. So they want us to calculate the sale of the non-current asset. So basically it's hidden. We have to calculate it. So during the year you had purchased 105, 1 lakh 5,000 non-current asset worth 1 lakh 5,000. So that you need to add. So the closing value of the non-current asset should be 2 lakh 95,000. But in 2020 you can see it's only 2 lakh 45,000. That means the non-current asset worth of 50,000 has been sold. All right, so I got the cost value of the non-current asset which has been sold. So let's remove the provision for depreciation or the accumulated depreciation. So in this case, my accumulated depreciation till 2019 was how much? 75,000. All right, and the depreciation charged in 2020 was 40,000. So this should be added. So my total depreciation will come to 1 lakh 15,000. This should be the total value of the provision for depreciation, but as per the question, it is 90,000. So the remaining difference, that is 1 lakh 15,000 minus 90,000, will give you 25,000. So this was the provision of depreciation for the asset which has been sold. So we wanted this 25,000, so we got it. So 50,000 was the cost value minus the accumulated depreciation, that is 25,000. So we get the cost, or sorry, we get the net book value of the asset which has been sold as 25,000. So this has to be was the net book value. So now in this case, here it is clearly showing that we are making a loss of 10,000. So if we are making a loss of 10,000, that means the net book value was 25,000. We are making a loss of 10,000. That means the sale price is 15,000. And the question which they were asking was the amount was received from the sale of the non-current asset. So 15,000 would be the right answer. So for question fourth, A is the right answer. I hope you all understood the calculation how I did. Remember this, they have not given you direct information, but if you know the concept, it's very easy. Basically, I wanted to get the net book value. So through net book value, I calculated the sale price. Okay, so let's move ahead with the question number 5. Let's see. All right. A business has a financial year end of 31st December. It purchased a motor vehicle as on 1st January 2017. So just let me write this thing. Okay, for $24,000. So this was the cost price of this non-current asset. The useful life of the motor vehicle was 4 years. The estimated residual value, scrap value, you can say a scrap value at the end of the 4 year is was 8,000. The business depreciates motor vehicle at 25% per year using the RBM method. No depreciation is charged at the year of disposal. Very important point to be remembered. Motor vehicle was sold on 31st July 2020 for 12,000. So what was the profit on the sale of motor vehicle? So again we have to calculate depreciation for few years and calculate and get the net book value, and we have to just calculate the profit. Very easy question. Okay, so from 17 we have to start calculating the depreciation. Depreciation is directly given at the rate of 25% using RBM method. So 25% of 24,000 will come to 6,000. So 6,000 we have to minus it over here. So this will come to 18,000. So now understand over here, 18,000 is nothing but my net book value as on 31st December 2017, because my year ends on 31st December. Similarly, we have to calculate for 18 and 19 also. So let's also calculate for 2007, I mean 18. 18,000 into 25% will give you 4,500. So this is the depreciation charge for 2018. So if I minus it, it will come to 13,500. All right. So this is my first year depreciation. Remember one thing, this is first year. This is my second year depreciation. This is nothing but my net book value as on 31st December 2018. Okay. Now, again, I have to calculate 25% of 13,500. Sorry, this is 13,500. So this will come to 3,375. So if I minus this, I will get 10,125. This is the net book value for 31st 12 2019. Okay, now understand one thing. Here, this line, as I marked over here, it's clearly saying that no depreciation is charged in the year of disposal. And when we are, which year we are selling? 2020. So hence, I'll be not calculating any depreciation for 2020. So the net book value which I am getting over here is how much? 10,125. This is the net book value, and I'm selling it for 12,000. So my sale price is 12,000. So the difference amount, that is 12,000 minus 10,125, that is 1,875. This is nothing but my profit on sale of the vehicle. So in this case, A would be the right answer. I will mark with the green pen. A is the right answer. I hope you all are getting. Easy question. Just we had to calculate the net book value and minus it with the sale price. Okay. Let's move ahead with the next question. The question is, a business suspense account appears as follows. Okay, so this is a suspense account. Opening balance 100. Salaries has been debited in the suspense account. Sales has been credited. Which statements are correct? Okay. Now, this we'll do one thing. We'll just write a journal entry for this. So this will help you out. So for this salaries wala thing, the suspense account has been debited by 150. I'll just make a note of this. Suspense account debit 150. Salaries account credit 150. For sales, it is sales account debit to suspense account credit. Amount is $50. Okay. Now the salaries account has been overcast by 150. So yes, it is true. Salary account has been overcast. So basically you had debited salary by 150. That's the reason in this journal entry, if you can see, you're crediting salary by 150. So this statement is correct. Second is the sales account has been overcast. So if you can see in the journal entry, sales has been debited, suspense account has been credited by 50. So yes, even this statement makes sense that the sales account has been overcast by 50. So the third one related to the opening balance over here, the total debit has been $100 less than the total credit. No, over here the opening balance was on the credit side. So why it is on the credit side? Because credit was less than the debit. So this doesn't make sense. So the right answer would be 1 and 2. So yes, A would be the right answer, right option for this one. I hope you all are understanding why A is the right answer and why I'm not including the transaction number 3. All right, let's move ahead with question number 7. In statement of profit or loss, carriage outward of 5,000 has been treated as carriage inward. carriage inward of 3000 has been treated as carriage outward. What effect do these errors have on profit? Okay, okay, class. So this question, it's a very easy question. Just you require some calculation. I always suggest that do this question with the help of a some small calculation. So the actual carriage outward was 5000, which you took it as inward, and carriage inward was 3000, which has been treated as outward. So let's understand through this small calculation over here. If you can see my working over here. So just I'm making some small calculation. So in this case, I'm assuming revenue as suppose 10,000. Okay. So in order to get the option over here is how it will affect my gross profit and profit of the year. So, so revenue minus cost of sales will technically give you gross profit. Okay, so this was the correct entry. So the correct entry of carriage outward was 5000 and carriage inward was 3000. So I'm assuming in my cost of sale there is only carriage inward and no opening inventory, nothing. So let's take this as 3000. Okay, this is the correct figure. So gross profit would be 7,000, and from 7,000 we further subtract our expenses. So in expenses we record 5,000. So over here, if I am recording 5,000, then my total profit of the year would be 2,000. Okay, so this should be my correct entry, but instead we have switched it off. So like the revenue is the same, that is 10,000. So instead of taking 3,000 as the carriage inward, I took it as 5,000. So in this case, I took it as 5,000. So my gross profit is how much? 1 minute. Yes. So in this case, my gross profit is coming to 5,000, and the expense wala part, that is carriage outward, instead of taking 5,000, if you can see over here, instead of taking 5,000, you took it as 3,000 as the carriage inward. So you took this as 3,000. So in this case, 2,000 would be a profit of the year. So now the question is, how is this affecting your gross profit? So over here, my actual gross profit, which I should get, should have been 7,000, but you are getting 5,000. So that means it has been understated. So understated by 2000. And if you can see, profit of the year doesn't make any difference on the profit of the year. So technically there is no effect. So that's the reason my option number C would be the right one. I hope you all understood this with this small calculation. Use it so you can understand and there would be no mistakes in attempting the answer. Okay. So let's move ahead with the next question. That is, a bank statement showed a credit balance of 1,500, a payment of 500, and a receipt of 1,250 were included in the cash book but have not yet appeared on the bank statement. Bank interest payable of 1,100 had been correctly recorded in the cash book, but due to the bank error, it had been recorded in the bank statement as 1,000. What is the cash book balance? All right. All right, so they are asking balance the correct balance as per cash book. So always we have to start with balance as per the bank statement which is given. That's why we are starting with this 1500, and we have to calculate, or we have to do addition and subtraction in which we can get balance as per the cash book. So over here they are saying a payment of 500, receipt of 1250 were included in cash book. So it was included, but it was not included in bank statement. So payment of 500. So 500 would have been subtracted from the cash book. Hence I have to subtract in my bank passbook also. So 500 I'm subtracting. Where else? He had received a receipt. Something was added in his cash book. So that's the reason this receipt needs to be added. That is 1250. So this addition and subtraction needs to be done, which will come to 1500 minus 500 plus 1250. So this will give you 2250. Now, bank interest payable 1100 has been correctly recorded in cash book, but due to bank error, it has been recorded as 100. So see, cash book may it has to be 1100, but I recorded as 1000. So again, I have to minus 100 from here because 100 was 100 was understated. It was recorded less. So I am subtracting more. So in this way, the correct balance would be 2150. So 2150 would be the balance as per the cash book. So balance as per cash book. Hence, C would be the right answer. All right, class. Next question, question number 9. In which books of prime entry is the contra between the sales ledger control account and the purchase ledger control account recorded? Okay. So in which book of prime entry is the contra between the sales ledger and the purchase ledger control account being recorded? So this question is obviously my general journal. General journal is the book in which the contra between the sales ledger. Contra entry is nothing but the set of entry which we record in control account in both of the control account. So cash book won't be the answer. Purchase journal is obviously for credit purchase. Sales journal is for credit sales. So B is the right answer in this. Okay, let's move ahead with question number 10. A bookkeeper reconciles the control account with the sales and purchase ledger. Which errors are identified in this way? Okay, superb question. So he's trying to reconcile the control account with the sales and purchase ledger. Okay, now which errors are identified? First one, a figure was transferred when copied from a book of prime entry to a personal account. So one thing you'll understand. So whenever we are recording, suppose sales ledger control account. So which book basically which book we use? We use the book of prime entry. That is, we use the sales journal in order to record the sales ledger control account, and this same book we use to record my sales ledger entries. So basically, remember, a figure was transposed. Transposed means nothing but flipping or rearranging type of thing. When copied from book of prime entry to a personal account. So what does this mean? Like for example, the number is 18, suppose 97. So in sales ledger control account, I wrote this, but in sales ledger to the personal individual ledger account, I recorded as 1879. So I did some gadbad with this. So that is the meaning of transposed over here. So this thing can be identified because I have recorded correctly in sales ledger control account, but it was flipped in sales ledger. So this can be identified. Second, an incorrect amount was entered in the books of prime entry only. So if something is recorded wrong in the books of prime entry, the same amount will be recorded in sales ledger control account and sales ledger. So this cannot be identified. Third is a total in the book of prime entry was incorrect. So now remember the books of prime entry, that is sales journal, the totaling mistake was there. So obviously if totaling mistake is there, that will not be matching with the sales ledger, that is their individual personal account in the sales ledger. So in this case it can be identified. All right. The fourth one is a transaction was omitted from a book of entry. Prime entry, if it's getting omitted, so there is no way I can record it in sales ledger control account or sales ledger. Hence, this also cannot be identified. So the right option over here would be 1 and 3, which is C option, because 1 and 3 can be identified easily. All right. So this is the 10th one. Moving ahead with the 11th one. 11. The question is the draft profit for the year of a sole trader was 1,08,000 before the following were taken into consideration, and accrual of 600 has been treated as prepayment. Okay. Second is depreciation of non-current asset has been undercharged by 2,000. Okay. The allowance brought forward for irrecoverable debt was 1850. The allowance to carry forward was should be 2250. Calculate the correct profit. Again, an easy question, class. So if you all can see over here, we have to calculate the correct profit. So the draft profit that is given 1,08,000. So from 1,08,000 we have to add subtract the transaction which happened. So an accrual of 600 has been treated as prepayment. So always remember, accrual is nothing but an outstanding expense. So outstanding expense always increases the expenses and decreases the cost. Okay, so this outstanding expense has been treated as a prepayment, whereas prepayment always decreases the expense and increases the profit. So when I need to rectify it, always remember I need to multiply it by 2. Okay, so first of all, I forgot to take this as an expense. Instead, I deducted my expenses by taking it as a prepayment. So right now, I need to deduct my profit not by 600. I need to deduct it by 1200. Okay, so 1200 subtracted. Next, depreciation has been undercharged. So very easy thing, depreciation decreases the profit. So this was undercharged by in your expenses. So right now show this as an expense. Next, an allowance was taken, or allowance for the recoverable was taken as 1850, whereas it has to be 2250. So that means you had understated the allowance of irrecoverable debts. So always remember, irrecoverable debts, allowance of irrecoverable debts will decrease your profit. So you understated it. So that means you have to now decrease your profit by the difference amount, that is 400. Okay. So if you add less this thing, you will get the correct profit. So 1,08,000 minus 3,600 will give you 1,04,400. So yes, my right answer would be option number A. So this would be my correct profit. Okay, now moving ahead with the question number 12. A company received interest 8,800 during the financial year. Okay, interest of $700 was due to be received at the beginning of the year and 850 at the end of the year. Okay, which entry appeared in the interest received account? Okay, very important to make the transfer to the statement of P&L. So technically we need to open a interest received account. So see, this type of question, it's very easy. Just open this account, interest received account. Okay, now in this question, just understand, income received, or sorry, interest received 8,800. So what's the journal entry? Bank account debit to interest received. So technically you are crediting your interest received by 8,800. Interest of 700 was due to be received. So any income which is due always has a debit balance. Why? Because it is treated as an other receivables, and other receivable we recorded in current asset. So current asset always has a debit balance. So this opening balance will be recorded over here, or will be posted over here as a balance brought down. And 850 at the end of the year. So again the next year you have an 850 as balance brought down. So this also has a debit balance. So closing would be over here, that is balance carried down. Okay, so just add less these items, this would be recorded in your income statement. So if you see 8,800 plus 850 will give you how much? 9,650.
So 9,650 minus 700, 1,650 minus 700 will give you 8,950. This will go in your P&L account. Okay, so this is your actual amount to be recorded in P&L account as income, or sorry, as interest received. But the question is, which entry appeared in the interest received account? So interest received has been debited, right? So the right answer would be option number D. I hope this question is easy. Okay, chalo, let's move ahead with the next question. Question number 13. Katrina started a business on 1st January 2020. For the year ended 31st December 2020, the following information is available. So and so information given, what was the cost of the sales for the year. So again, a very basic question. So always we know the format, right? So just follow the format. First is, we always take into consideration revenue. Revenue is given as 15 lakhs. Okay, from revenue we subtract the cost of sales. What we get? We get the gross profit. Gross profit, from gross profit we subtract the expenses, and what we get? Profit of the year. Now this question, they have given us the profit of the year, that is 62,700. Expenses, they gave us as 8 lakh 75,000. Now always remember, whenever you are going from from downward to upward in a reverse order, always remember you have to reverse it. Like for example, if there is an minus over here, so you will have to add it in order to get the gross profit. So 8 lakh 75,000, you will add 62,700 over here, which will give you 9 lakh 37,700. So 9 lakh 37 700 would be your gross profit. Now basic calculation, you have your revenue, you have your GP. So the difference amount would be your cost of sales. If I'll subtract 15 lakh from this, I will get 5 lakh 62 300. So that would be my cost of sale. That's what they are asking. Hence the correct answer would be option number A. Okay. So just remember, you have to go from the reverse order. One important thing, you will have to reverse it. Like for example, if it's subtraction, you will have to add. Remember that. Next question, question number 14. What are advantages of a sole trader of forming a partnership business? Losses can be shared by all partners. Yes, that is an advantage of forming a partnership firm. I mean, second question, second option, more capital may be available. Obviously, right? That is one of the reason of having a partnership firm, so that many partners can invest or can bring the required amount of capital. Third, profits may will be greater than those of sole trader. Not necessary. There is no assurance that partnership firm is will always make greater profit than a sole trader. There will be disagreement between a partner. How is this an advantage? I don't know. So that's the reason 3 and 4 would be eliminated. The right option would be 1 and 2, which is option number A. Okay. Now moving ahead with the next question. That is okay. Smith and Jones are in partnership, sharing profit and losses 3:2 respectively. Profit for the year was 1,52,000. Smith was charged interest on drawings of 1650. Jones had a partnership salary of 40,000. What was Smith's share of the residual profit? Okay, again a easy question over here. So for this, just they want to know the Smith share, and the ratio is given, that is 3:2. So first we need to calculate the residual profit. Residual profit, how I'll get? We know that 1,52,000 is the profit of the year. Now in this I need to always remember interest on drawings will add you have to add in the profit of the year. So 1650 I need to add over here. Okay, and salaries always decreases the decreases the residual profit. So 40,000 I need to subtract. Okay, so 1,52,000 plus 1650 minus 40,000. So 1,13,650. Now understand one thing. This is the overall residual profit, but the question is for Smith share, which is 3 is to 2. So always remember, out of 5 part, 3 parts belongs to Smith. So that's why you will multiply it by 3 and divide it by 5. So divide by 5 into 3 will give you 68 190. So hence B is the right answer. Okay class, clear? Okay. Now let's move ahead with the next question. Question number 16. There are three there are three partners in a partnership. The total of the current account at the start of the year was 18,000 and at the end of the year is 32,000. Total drawings for the year amounted to 22,000 and total of partners salary are 13,000. What is the profit of the year? Okay, again an interesting question. For this type of question I have made this format. So So let's begin with this. So we have to open a partner's current account, the total partner's current account. So we know the opening balance is 18,000. So hence I am writing over here as 18,000 if you all can see over here. Okay, and closing balance also they have given us 32,000. So again I wrote it over here as 32,000. Now, very important. Total drawings of the year. Drawing always decreases the current account balances. The partner's balances. So, because it has a credit balance. So, if I need to decrease it, I will have to record this 22,000 over here. So, this 22,000 which you can see over here, this is nothing but my drawings which all the partners has done. Okay. Now, total of partners salary 13,000. So salary always increases the current account balances. So that's the reason I have to record it over here. So whatever salary I'm recording over here. Now if I see the debit side is greater, that is 54,000 compared to my credit side. Credit side is coming to 31,000. So 31,000 minus 54,000 if you do, you will get 23,000. Now hold on. This 23,000 is not the profit of the year. The question is profit of the year. So this 23,000 is the residual profit. Okay. Now technically we have to calculate the profit of the year. Now understand over here. Residual profit, what is the formula or how do we calculate profit of the year? In profit of the year, we add the interest on drawings. From that, we subtract the interest on capital and we subtract the salaries. Okay, so right now we know the residual profit which we just now we calculated over here. If you can see over here, that is 23,000. So 23,000 I have written over here. Okay, profit of the year we need to calculate. We don't know the interest on drawing, we don't know the interest on capital, so leave it. But they have given us the salary, that is 13,000. Hence we can minus the salaries over here, that is 13,000. So just do the simple calculation, math calculation if you do over here. This 13,000 will go to the other side of that equal to, which will be added. So 23,000 plus 13,000 will give you the profit of the year. And the profit of the year would be 36,000. Hence the correct answer would be D. So remember this question. Don't think this 23,000 as the profit of the year, which is there in the question. Purposely they will give you, but don't get deceived by this. Okay, so I hope this question number 16 is clear over here. Here is the working. So let's now move ahead with the next question. Question number 17. Which statement about right issue is correct? Okay, so now these shares can be issued or can be offered to anyone. No, this is actually issued to the existing shareholders first. So A is not the appropriate one. Which these shares can only be offered to the existing shareholders. Yes, just now I said. So B is the right one. Let us also see C and D. These shares cannot be sold at a premium. No, nothing like this. This share cannot be sold at less than the market price. No, in fact, we sell it at lesser than the market price. That's the reason the existing shareholders can buy it, or they have the right to buy it or to exercise their right, because it is sold at a discounted price. So B is also not the correct one. Hence B is the right option. Okay, chalo, let's move ahead with the next question. Question number 18. A company's profit from operation has increased by 10% in a year, while its gross profit has increased by 5%. Which factor could explain this? Okay, it's very easy question. Always remember how we calculate revenue minus cost of sales will give you gross profit. In this, if you minus the expenses, you will get profit of the year. So now the question is, even the profit and the gross profit has increased. So how it will increase? Either the revenue is increasing or cost of sale is decreasing. Okay, either the expenses is decreasing. So these are the reasons the profit will increase. Now again, this question, let's see which factor could explain this. A decrease in the distribution cost. Just now, as I said, even if the expenses is decreasing, this would be one of the reason to increase the profit from operation. So yes, this is the right, or this can be included. A decrease in the finance cost. Okay, now understand over here. What did they give? I mean the profit from operation. From this, always remember we never take finance cost into consideration. So finance cost is never considered or never taken into consideration for calculate the profit from operations. Hence, decrease in finance cost will never be affected. So, like profit from operations, in this, after this we subtract the finance cost if any. Okay, so that's the reason this cost is actually not going to affect in either increase of the profit from operation or the gross profit. So hence second is eliminated. And increase in the revenue received. Yes, this also could be the answer, because from gross profit, in that we add other incomes. So if my other incomes are increasing, my profit from operations or that also would increase. So that is included. An increase in the selling price. Okay, now understand one thing over here. This won't matter much. I'll explain over here. See, now if I'm increasing selling price by 10%, okay, now what if at the same time my cost also increased by 10%? So technically your selling price increased, but cost also increased, right? So profit in terms of percentage, it will never change. It will remain the same. Getting my point? So hence fourth option or fourth one also is eliminated. So the right one would be 1 and 2, which is option number E. Okay, I hope this part is clear. Let's move ahead with question number 19. A trial balance on 31st December 2020 showed the following information. Ordinary share capital so and so, retain earning 3 lakhs. On 1st January 2021, the directors created a general reserve of 70,000. At the same time, 2 lakhs ordinary share were issued for 3 lakhs. By which amount did the total reserves increase as on 1st January? Okay, again, for attempting this question, you should know that total reserve. If you all can see my screen over here. So total reserves includes what? Capital reserve plus revenue reserves. Okay, and what are the capital reserve? That is share premium, CRR. CRR is nothing but capital redemption reserves and revaluation reserve. And revenue reserves may you have general reserve and retained earnings. Okay, so these are the reserves which affect your total reserves. So now in the question they are saying, on 1st January 2021, the director created a general reserve of 70,000. Now understand one thing. General reserve, for creating a general reserve, we actually remove it from retained earnings. So your retained earning, the tape prior to that was 3 lakhs. So actually we removed 70,000. 70,000 was deducted from retained earnings, which came to 2 lakh 30,000, and then a general reserves were created. So technically in your revenue reserve there was no increment, there was no increase. So this 70,000 will actually not make any difference in increasing the reserves. It's like taking out from one a shirt pocket and putting in your pant pocket. Okay, so that's the reason 70,000 will not make any difference over here. But at the same time, 2 lakhs ordinary share were issued at 3 lakhs. Now, what is the share price over here? Clearly, they gave it as $1. So now, if you are issuing 2 lakh shares at the rate of 1, it should be 2 lakhs. But you issued for 3 lakhs, so that means the different amounts is nothing but my share premium. Hence, there was an increase of 1 lakh in your share premium. So I can say there was in your total reserve, there was an increase of 1 lakh. So option number B is the right one. I hope this is clear, easy. Okay. Now let's move ahead with the next question. That is, the following information is given in the statement of, in the financial statement of a limited company: ordinary shares, general reserve, retained earning, 8% debentures. Now, what is the value of total equity? Okay, always remember they are asking us total equity. So total equity is nothing but you have to just add all three of them. Remember, 8% debenture is a part of non-current liability, and it will not come. So if you just add 12 lakhs plus 1 lakh 20,000 plus 7 lakh 10,000, so your right answer would be 20 lakh 30,000. Hence, B is the right answer. Very easy question, direct question, I would say. Okay. Now, now moving ahead with the next question. Go ahead with the question number 21. The table shows year-end information of a company. So they have given P&L, they have given statement of financial position. What is the return on capital employed? Okay, so again a direct question. Just understand we need to know the formula. So for the formula for return on capital employed is profit from operations. If you can see on the screen, profit from operation into 100, or profit from operation divided by capital employed into 100. Okay, so now profit from operation they have given over here as 14,000. Okay, and in capital employed, so capital employed is nothing but your total equity plus your non-current liabilities. So if you can see over here, this entire would be a part of your capital employed. If in this, remember, your non-current liabilities are included. So that will be 1 lakh, 1 lakh plus 15,000, 1 lakh 15 plus 35, 1 lakh 50,000. So 14,000 divided by 1 lakh 50 over here, if you can see, and multiply by 100. So your ROCE, return on capital employed, would be 9.3%, if you can see on the screen. Whenever you multiply by 100, the answer would be always in percentage. Hence, C would be the right answer. Again, very easy question. Okay, so let's move ahead with the question number 22nd. A company provided the following information. What was the non-current asset turnover? So basically, what is the formula over here for turnover? Revenue divided by non-current asset. Always remember, we take the net book value. Okay, so in this case the revenue is how much? 3 lakh 90,000, as you all can see on the screen. And what is the formula for net book value? That is cost minus depreciation of the non-current asset. So 2 lakh 60 minus 65 will give you 1 lakh 95,000. Okay, so now if you see over here, 1 lakh 95,000 into 2 will give you 3 lakh 90. So that means this would be 1 is to 3. So your the non-current asset turnover is 2 times. So hence the right answer is D. I hope you are understanding. Now let's move ahead with question number 23. A garage owner paid the following cost. Okay, which of these are direct cost? Okay, So let's see. Garage equipment repairs. Garage equipment repairs. No, these are not the direct cost. Okay, you are repairing your equipment, the machines and all. So this would be considered as indirect cost. Remember. Okay, mechanic wages. Yes, these are direct costs because they are actually working on the, I mean, on the cars or whatever repair work they are doing. So yes, the wages paid to them is a direct labor, how we say. So in this case, this would be a direct cost. Rent paid for garage premise. No, garage premise would be considered as indirect cost. Remember, it would be overhead. Now, spare part used to repair vehicle. Yes, this is related to your direct kharcha. So this would be a part of your direct cost. So hence sec 2 and 4, that makes D the right option. Alright. Now let's move ahead with the question number 24. A business provided the following information. Okay, labor hours and all that thing given. Total overhead 9 lakh 18,000. Okay. What was monthly fixed overhead? Okay. 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 Now this. Okay. So first of all, understand one thing. Your total overheads include what? Two things. Total overheads will always include your variable cost as well as your fixed overhead cost. Okay, so fixed overhead plus variable overheads would be included, will be called as total overheads. So over here, okay, if you can see over here, when the labor hours were 64,000, the total overhead was 9 lakh 18. When the variable overhead increased to 76, it came to 10 lakh 62,000. So from this, I can come to know the variable cost per labor hour. How? I'll explain. Okay, so now this increase, don't you think this increase would be your variable overheads? So let's understand what was the difference between this. That is 10 lakh 62,000 minus 918. This will give you 1 lakh 44,000. Okay, so this increase in my total overhead, this would be a reason of the increase in the labor hours. So this is technically variable overhead. And why did this increase? Because your labor hours increase. So 76,000 minus 64,000 will give you 12,000. Okay, so by this I'll come to know, because 12,000 hours increased, your total value of total variable overhead increased to 1 lakh 44,000. So by this, will I not get my variable cost per labor hour? The answer is yes. So we'll just see my e-board over here. Okay, so how much is my total variable overhead? It's coming to 1 lakh 44,000. I just showed you, this is just the difference amount. Okay, now what is the formula for total variable overhead? Variable overhead per labor hour, per hour into labor hours. Okay, so right now we know our total variable overhead, that is 1 lakh 44,000, and we know our total hours, that is how much? 12,000 hours. So just do the simple mathematical calculation. 1 lakh 44,000, this 12,000 will go over here, other side of the equal to. So this, if we divide it, you will get $12 per hour, per labor hour. That is my variable cost per labor hour. So once I get this, remaining work is super duper easy. Now let's see. So this 64,000, okay, this is my total hour. If I multiply by the total variable labor hour per labor hour, so this should come to how much? 64 into 12, this should come to 7 lakh 68,000. Okay, this should be your variable overhead, but the total overhead is coming to how much? 9 lakh 18,000. Okay, so just I will take the difference, that is 9 lakh 18,000 minus 7 lakh 68,000. If I do this, it will come to 1 lakh 50,000. So this is nothing but my fixed overhead. I hope this concept is clear. Just now, as I said over here, if my total overhead is 9 lakh 18,000, variable overhead is coming to 7 lakh 68,000. What is my fixed overhead? So just I did a mathematical calculation. Just I took it to the other side of the equal to. Just I got the balancing figure as 1 lakh 50,000. So this would be my fixed overhead. I hope this is clear. So they are asking you for fixed, 1 lakh 50 would be the right answer. If they would have asked for variable, then C would be the right answer. This is how they change the question. Okay, so easy question. Moving ahead with question number 25. What is the reason for calculating an overhead absorption rate in manufacturing business? Okay, to control overhead expenditure? No, not the not this is not the reason. To determine whether or not a supplier is overcharging? No, this is also not the reason. To enable overhead to be apportioned to cost centers? Not necessary always. Let's see the D option. To establish cost per unit of a product. Yes, D is the right answer. Okay, now understand why is not C. To enable overhead to be apportioned to cost center. See, in manufacturing business, we know that there are different cost centers, and there are manufacturing department as well as service department. But normally we apportion the service department expenses or whatever kharcha to the cost centers, but not necessarily always there would be a service department. So not necessarily always you have to apportion. What if there is a direct cost center to your manufacturing business? So in that case, apportionment is not required, right? So that is why C is not the right answer. Okay. Now moving ahead with the question number 26. Budgeted overhead expenditure was 1 lakh 80,000 and budgeted labor hours were 12,000. Actual overhead amounted to 1 lakh 96 and actual labor hours were 12,200. Okay. What was the under absorption and over absorption of overhead? Okay. So understand one thing over here. Before calculating any under absorption or over absorption overhead, we need to get the budgeted overhead or budgeted whatever you have calculated as per the budgeted labor hours. We need to calculate, we need to get it as per the actual labor hours. So what do I mean by this? So your budgeted labor hours which you calculated was 12,000 hours, and in this 12,000 hours you assumed it as 1 lakh 80,000 would be the overhead expenditure. This is the budgeted, but your actual labor hours was how much? 12,200. So we need to get our budgeted overhead expenditure as per the actual labor hours. So this is what which we need to calculate, and this figure needs to be matched with my actual overhead expenditure, that is 1 lakh 96. Okay, I cannot directly compare 180 with 196. It would be wrong. Okay, so let's calculate our budgeted overhead expenditure as per the actual labor hours. So just we have to do a cross multiplication. It's very easy. So your budgeted labor hours was how much? 12,000. And for 12,000 hours, you assumed or you budgeted 1 lakh 80,000 as the total expenditure. So how much would be for 12,200 hours? So just do a cross multiplication. By the way, this is R. Huh? This is R's. Okay. So if you just do a cross multiplication, 1 lakh 80,000 into 12,200 divided by 12,000 will give you 1 lakh 83,000. So this is what you budgeted. Okay. But your actual came to how much? Your actual came to 1 lakh 96,000. So obviously there was an under absorption of overhead, and that an under absorption would be the difference amount, that is 13,000. Hence D would be the right answer. Okay, so I hope this question is clear. Now question 27. What might a business use Why might a business use marginal costing? Okay, To calculate break-even units, absolutely right. We use it to calculate break-even unit. We can use to decide on the most profitable use of limited resources. Absolutely right. Even we use it for this. Basically, there are limited resources factors, limitations of labors, limitation of raw material, and we try to calculate or we try to make the maximum production which in which the contribution is the maximum. So second is also the right answer. Third one, to decide whether to make a product or buy it. Absolutely right. So even three is the right one. So hence A will be the right option in this. Easy question. Now let's move ahead with question number 28. How is margin of safety calculated? That is actual sales minus break even sales. Yes, this is a direct formula which is given. Second is actual sales minus expected. No. Cost of sales. No, no. We never take cost of sales into consideration. By the way, I've just shown the break-even chart. How does it look? If you can see my chart over here, this is my fixed cost over here. This is my quantity. My y-axis represent revenue and cost. My x-axis represent quantity. Fixed cost. If you can see, this is my total cost. Total cost always starts from the fixed cost. Okay, and this is my total revenue. Always remember wherever your TR and TC intersects each other, that would be your break-even point. Okay, so this point is the break-even point. And above break-even point, this point which is shaded in yellow, this would be called as margin of margin of safety. Okay, this would be your margin of safety. So what ultimately what would be the formula? Total revenue is nothing but your actual sales, right? So actual sales minus your break even point. So this difference will be your margin of safety. So actual sales minus your break even. So the same thing I represented on a graph so that you all can understand. Okay. Next, let's move ahead with question number 29. Question number 29. A business manufactures and sells a single product. Okay. The following information is available. Selling price per unit this year 25, next year 25. Variable cost 15, 17. Okay. Per unit, remember. Total cost 80 and 84,000. Okay. The profit for the year is 20,000. How many units must be sold to achieve the same profit next year? Okay. Very interesting question. Just understand. Let's understand the format of the marginal costing wala part. Okay. So to save time, I have made this format. Sales minus variable cost would be your contribution minus fixed cost would be your profit. Okay. So now in the question they are asking, they want they want us to have the same profit. So profit would be 20,000. This is as it is given. Okay. Now they are saying that the fixed cost is 84,000. Okay, so I have written 84,000 as my fixed cost. So always remember, as again and again I'm saying, if you are moving from from downward to upward, you will have to reverse it. Like for example, this subtraction you will need to add it. Okay, so 84,000 plus 20,000 will give you 1 lakh 4,000. So this is what I got the total contribution as 1 lakh 4,000. Okay, so now this just we have to do a simple calculation. We know that the selling price per unit is how much? 25. And what is the variable cost? That is 17 over here. So 25 minus 17 will be 8 per unit. Okay, now how we get total contribution in value? The formula is nothing but total units into contribution per unit. Okay, so if you can see this, I have written over here. Now we know the total contribution. Just now I calculated, that is over here 1 lakh 4,000. So 1 lakh 4,000 is the total contribution in value. Total units I don't know, that is the same thing they are asking us, how many units must be sold. So that's what I'm going to calculate. But we know the contribution per unit. That's now we did sales minus my variable cost, that is 8. So I have put 8 over here. Okay, so now just simple calculation. Just put 8 is multiplied, is multiplication. If you're taking to the other side, it will become division. So 1,04,000 divided by 8 will give you 13,000 units. So in order to make 20,000 as profit, you will have to sell 13,000 units. Hence, D would be the right answer. Okay, even we can solve this thing. Let's if you want, we can put it over here. 13,000 into 25 will give me how much? 3 lakh 25,000. So this would be 3 lakh 25,000. 13,000 into 17, that is the variable cost, will give me how much? 2 lakh 21,000. Sales minus variable cost will give you, that is 3 lakh 25,000 minus 2 lakh 21,000 will give you 1 lakh 4,000. Okay, so then 1 lakh 4,000, if you minus the fixed cost, you will get 20,000 as the profit. Okay, very easy question, direct question. So 13,000 would be the right answer, option number D. So let's move ahead with the last question. A company wants to sell 50,000 units and achieve a profit of 6 lakh. It has a variable cost of 60 per unit and total fixed overhead as, okay, 4 lakhs. Which selling price per unit does the company need to charge? Okay, again a direct easy question. Let's solve over here. So question number 30. Okay, so this is the format. I just made it over here. So let's understand over here now. They are saying the profit they want is how much? 6 lakhs. So I'm just writing over here as 6 lakh. Fixed cost they have given as 4 lakhs. So as I always say, that if you are going from down to up, if you are moving from down to up, we have to reverse it. So if there is a subtraction over here, we need to add. So the total contribution which you will get is 10 lakhs. Okay, so 10 lakhs would be the total contribution. They have given us the variable cost. Variable cost is how much? 60 per unit. And they have given us the units also. So 50,000 into 60 will give you how much? 30. 1 minute. So that's right. So 50,000 into 60, that would be 30 lakhs. Okay. So now 30 lakhs is my variable cost. 50,000 into 60 will be 30 lakhs. Okay. Now they are saying, now just again we have to move from downward. So if there is a subtraction over here, that we'll have to add. So 30 lakhs plus 10 lakhs will be 40 lakhs. Okay, now they are saying which selling price units does the company need to charge. So 40 lakhs is the total value. Okay, what is the formula for revenue? That is 40 lakhs. How did technically? Okay, so just let me show you this way. Total sales or revenue, how do we get this? That is total units sold into selling price. Okay, so they are asking you to calculate the sale price, but just now we calculated the total revenue, that came to how much? 40 lakhs. 40 lakhs. Units sold, they have given us 50,000 units, and they are asking you to calculate the sale price. So just divide this 40 lakhs divided by 50,000. That would be your sale price. So hence the right answer for this would be $80 per unit. This would be your sale price. Hence, D, 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 yes. D would be the right answer. So I hope you all understood how did we calculate. Just remember this reverse order technique. Just remember this format of marginal costing, which will help you to solve any question related to marginal costing. Okay, so I hope you all understood from this paper solving. Any doubt is there? Please leave a comment. I'll try to clarify your doubts. All right. So thank you so much and have a great day. Thank you. Bye bye. Take care.